Hey guys, so today I want to take a look at a coin called STX. So the ticker for this is STX, and it's trading very technically. I want to show you guys this. So for the people that say TA doesn't work and this and that, well, it clearly does. Okay, so if you have the STX chart, open it up on a weekly, and what you could do, the first thing, the most significant level on this chart is this line here, where it's just horizontal. Just draw the horizontal trend line, and I like to draw the trend line, and then I mark like a kind of make it a range. So I just used the rectangle tool here, and I just made it a range. So this particular range here on the chart, if you want to trade this coin, mark this out, because as you can see, this level served as a resistance for 1, 2, 3, 4, 5, about 6 weeks, a month and a half right here before we broke out. And then so we broke out, and then we had our big run up here. And then when we came back down, look exactly where we came. Look where we got support. Well, this previous level of resistance flipped to support. So we got this candle close with a long wick, very bullish sign. And then we also started to form this support, this upsloping support line. So that was the second touch. But you'll see that held us again right here. Another support until we broke down here, and that marked the end of the bull market. Now, to further elaborate on the importance of this horizontal support and resistance line, as you see, once we came down here, once the bear market was in full swing, it served as a support level for about a month. You see, so support here, support here, support here, support here. So for 1 week candles, it held this level, right? The bodies were closing above it, but then eventually we broke down. When we broke down, we came up and look where we got the resistance. So remember, resistance, if you break it to the upside, it'll look for it to become support. On the downside, if you break a support, look for it to become resistance. So look at this again. This line, we broke it, we came back up, formed a doji, and got rejected off of it again. And now, only recently we broke out of it with this massive bullish candle. And then look where we back tested. Look at this wick. Back test it, and then again, it's holding a support. So just so technical. And actually, guys, I normally mention this towards the end of the video, but if this is the first time you've come across this channel and you want to be able to find it again, maybe just subscribe, because it's a brand new channel, and normally YouTube will recommend the more established channels with like 100,000 subscribers. So I'm not sure how you found this, but if you want to see more of these videos, I'm going to put out about 2 or 3 analysis videos per day. Just subscribe now, hit the bell, hit on all, click on all, and then you'll just get notified when I release new content. Anyway, relating to how technically this is trading, when you have a big upswing, and then you're wondering where it's gonna find a level of support, what you can do is you can use a Fibonacci. And there's a point on the Fibonacci, it's called the golden pocket. So if you draw it from the bottom to the top, and then you can look for these levels on the Fibonacci to act as a support. So look at this, look where we got support. This yellow range here at the 618, and I also put in the 65% retracement level. And this to me is the golden pocket, and look where we got supported. Right here, double bottom right at the 618 retracement. It's crazy. And then now, okay, on the upside, if you want to look at potential levels of resistance, what you can do the opposite. So you take the Fibonacci retracement. This time you draw from the top down to the bottom. Look where we got resistance at. Right? The golden pocket again, that was the resistance. So you see it fought with it here at the 50% retracement. We broke that, and then we came up, and then we got rejected right here at the 618. So, or sorry, this is the golden pocket, so the 65. But yeah, crazy, eh? So here we are. We got support at this level, at this horizontal support level, like the main most important level on this particular chart. So if we say, okay, where are we right now? Like, what kind of potential trade can we get in here? Do a Fibonacci from the bottom to the top, and let's see if we're on a level. Well, look, we're at the 50% retracement level. So let's put this down to the daily. Okay, you see we're getting supported by this 50% retracement level. So what you can do, you can say, okay, well, Potentially, if you wanted to enter a long, you can enter a long and put a stop loss down here and then target maybe one of the upper regions here. So let's see what that would look like if we did that. Let's say we enter a long position right here. And what we want is we want to get a trade that offers a good risk reward ratio. So we put our stop loss just below these wicks. See, it came down a wick twice, and then we'll target this upper range. So this gives us a risk reward ratio of about, we would risk 1 to gain 2.93. So almost a 3-to-1 risk reward ratio. So we risk 5.25% to hopefully get around over 15%. So that's a pretty good trade. Alternatively, if you wanted to, if for example, you say, if you don't want to take that trade, if the price comes back down to this 618, because as we can see that the price on this particular chart is really respecting these levels, you can put a limit order down here with a stop just below, and then you can target the upper range for maybe an even better risk reward ratio. One other thing I want to point out is just a tip for the future, and you can see this on many of these altcoin charts. We had like a double top on Bitcoin and many of the altcoins, and on Bitcoin and this particular coin on Stacks, the second part to the double top went actually higher than the initial, right? So this time the initial top was around 2.84, and then we had the double top, which went over $3. In the future, when you see this happen, if you see like a double top formation, look at the oscillator. So I have an indicator on here. It's called the divergence indicator, and what you can see, I mentioned this in a lot of videos, but I want you guys to learn this because it's one of the strategies that actually does work. So here's where we made the first high, and then here's where we made the second high. But you see, on the price, the second high was higher than the first, right? So this is higher than here. But on the oscillator, we made a lower high, a much lower high. So price action, higher high, oscillator. You could look at the RSI or this divergence indicator. It's basically the same thing. We made a lower high, and this just marks out whether it's that this was a bearish divergence. So guys, look for that when you're making like a double top or a double bottom, and you're really fighting. If you want to see if the trend is weakening, then look for a divergence on the oscillators. Okay, so let's move to a different chart. And here I have an indicator loaded up. This is a premium indicator. It's called Lux Algo Signals and Overlays. And this particular one that I have loaded up, it's called a smart trail. And these, they act as a dynamic level of support and resistance. So for example, if the price, you're above the blue smart trail here, and the price comes back to it, oftentimes it'll act as a level of support. So as you can see here, we came up, and for about a month, maybe almost 2 months, this smart trail served as a support level, and then it carried us all the way up to the top of the bull market here. When we broke down and then we came back up, vice versa, if the price is below it and you come up to it, it'll act as a level of resistance more often than not. So you see, we were really fighting with this level of resistance. And a lot of the times when I see this happen and I see like the trend kind of weakening, I'll enter a short, put a stop loss above it, and then I'll try and profit on a downswing. So here we are. We broke out of it, and look, we got support here on the smart trail. And as from this point forward, I think as we come up, the smart trail will follow it, and we can look to this as to just serve as a support level throughout the bull market, if we are indeed at the initial phases of a new bull market. So yeah, that's Stacks. One more thing I wanna take a look at. Let's say, for example, if you wanted to enter a short time frame trade, I'll see if there's any here setting up. Not so much, but I would mark, if you have your charts, guys, mark the previous day high and the previous day low if you can. I use an indicator to do that called Price Action Concepts. Again, that will be linked in the pinned comment if you want to give it a try. But a lot of the time, the price will act, these levels will act as a resistance and a support level. So right now, we're right in the middle of it. So if I was to take a trade right now, the one here would be maybe a short, and then I place my stop loss just above here, just a very low risk trade. I'm not going to take it because I think overall the price action is rather bullish, so I'm not taking this, but I'm just kind of giving you guys an example. So this is the midpoint line. We're right in the order block. I would maybe look for a short right here, place a stop loss just above the order block. The order block is just an area on the chart that has a lot of transaction volume, and these regions tend to act as a level of support or resistance. And then I would target down to the previous day low. So this would give me I would risk 0.86%, so less than 1%, to gain almost 4%. Risk reward ratio of about, I would risk, for every one I risk, I could potentially gain 4.5. So guys, trading just boils down to this. When you trade, you just got to understand that nobody really knows which direction it's going to go. You can just use the trends to get a bias and a directional bias of where it's more likely to go. But what you want to do is you just want to identify setups that give you a good risk reward ratio, and you want to enter positions where you don't have to risk a lot. So if you're wrong, you want to know that you're wrong very quickly, and get out of your position, right? So if I'm going to take this trade, right, and I'm wrong half the time, I'm going to be profitable because every time I take this trade, it's a 1 to 4 risk reward ratio, right? So yeah, this is just basically what you got to do. You got to find these levels of support and resistance. Oftentimes when I'm trading short term, I like to trade within the previous day high and the previous day low. But yeah, guys, that's all trading is, you know. But if you're swing trading, you just want to buy and hold or whatever, a lot of the altcoins are starting to look very good. They're starting to break out of long-term downtrends. And we're kind of just in this phase where we're in a consolidation period. And I think again, I've mentioned this pretty much every video, I think we're in the starting phases of a new bull market. But yeah, if you want to trade long-term, just follow the trends. You can just trade these trends, maybe go on a weekly, and like when we flip blue, you can buy you could just buy when we come back to this blue level. You can buy those and just basically follow it all the way up until we flip red again and we get under this, and then yeah, you can look for a short. That's how you do the long-term swing trade thing. But if you want to trade like daily or like you could just trade like shorter term time frames and just look for like entries that give you a good risk reward ratio. So for example, right here on the hourly, if you had this thing up here, once you saw these like 2 wicks getting rejected, you can enter a short position, and then just basically if you get a candle body close above here, you're wrong, and you can exit the position, and then just basically just ride it down. So yeah, guys, that's stacks. Overall, this trades incredibly technically. Obviously, if you want to trade this, even if you don't care about stacks or whatever, on pretty much every coin, you can mark out the most significant levels. I would mark this level on your chart, and you can set an alert. So you don't even have to focus on this. If the price does come down to this level, set an alert, then you're going to get notified, and then you can look to enter either a long or a short, depending on the price, depending on whether the price is above or below it. So once again, that level on this chart, the main level is about 50 cents. 50 cents, nice and easy. So yeah, guys, that's stacks. All right. And if you haven't subscribed, I already mentioned it at the midpoint of this video, but if you want to get notified, just subscribe now, and take care. Have a good day. Bye.